Hello everyone, and welcome to this edition of the Think Tank. I'm sorry I haven't done a video vlog in a while. I've been busy, so here I am, I'm back. I want to talk about the economy, the markets, and particularly gold. Gold has been very disappointing as far as where it's going, how it's trending. And if you look at gold over the past year and a half, and that's a long time, especially in today's type of investment atmosphere where people are getting in and out of investments quite quickly. That is a long time. And when you see a market going down so substantially over that period of time, that's a bear market. If you like gold, you like it as an investment, you consider it a safe haven or an insurance policy, it is going down substantially, okay? And no matter what you invest in, if something is going down and you need that money, that is not a good investment. And you can't look at the 10-year anymore because the bull market is over. We're in a bear market. Will gold go back up again? Is it bottoming now? We'll have to see. Markets eventually bottom. They have a point of support, and that support can be tested, and then it can trend the other way. But after this recent sharp downward move that we've seen in April, and the strong move that it made from hitting that bottom at around 1321 on the June 2013 futures contract, looking at that contract, that was on April 16th, it's gone up strong since that point. That can be just a correction from a continued downtrend, or it can be bottoming out. We don't know. But I'm doing this vlog because I want to put investments in perspective. And people say that gold is a long-term investment, and you know, that's true. It's good to have it long-term, but a year and a half is also long-term. And what I'm talking about is when you're in a crisis, when you have a weak economy, a weak dollar, inflation, you're going to need your investments right now. You need investments right now to use for basic needs. I mean, you can't go into a grocery store and say, hey, you know, gold is going to go up 10 years. I mean, you got to pay for your groceries now. You got to pay your rent now, your mortgage now, your utility bills. You got to pay them now. People live life in the present. And if you can't use your investments now, then what good are they? Especially if you've been invested. Let's say you have been invested in gold for a year and a half. You want to take some money out just to use, just to, you know, to live. I mean, you can't do that. Because gold a year and a half ago, and this is only since April 16th, was down about 30%. I mean, that's terrible. And of course, that's if you invested in the high. So let's say you did it. Let's say you invested a little bit lower. You know, let's say you invested a year ago. You know, still a year ago, you know, gold is down almost 20%. So that's terrible. I mean, if you needed that money and it's down that much, not only you don't have that money to use, especially if you really need it, you can't sell. You can't sell at that price. However, if you look at equities, and there are gold investors that don't like equities. A lot of gold investors like long-term. They're predicting crises. They're looking for stability, a safe haven. You look at equities, you know, equities have done very well. I mean, you look at the Dow. The Dow is almost up 11% from a year ago. That's a pretty good return. And then it's up over 12% from the closing low of January 8th. And around now, today the market is up strong as I speak. And gold has gone up today as well. But the point is that, you know, if you look at that move, and that's just from, you know, the closing low of January 8th. So that's just a few months. That's a pretty strong move. Let's say you needed some of that money. You can take some out and use it to spend on basic needs. And that's the point that this vlog is that investments are not just nest eggs. You know, especially for people that are older. Let's say they need some money right now. You need spendable money that you can take out right now and use it. That's what investments are for. If you can't spend your investment, what good is it? So you have to understand what investments are and what to invest in. And equities have done much better than gold, have done much better. I mean, gold has been a disaster over the past year and a half. So, listen, it depends what your situation is. If you're a long-term investor, you're looking for a nest egg, you're looking to put money away, and you're worried about the stability of the economy, the dollar, and things of that nature, yes, absolutely, you should have some money invested in gold. But if you're a intermediate-term investor or a shorter-term investor, and I don't mean short-term, a year and a half to me is long-term. I mean, that's a long time, especially for someone, like I said, who's older. You have to consider equities, because equities have done much better over that period of time. And of course, you have to look at, bonds. I mean, a lot of people invest in gold. They're afraid of this bond bubble that people are talking about. Bonds have performed better, and they've been consistent over the shorter term. So that's another investment to consider over the short term. Long term, I'm worried about bonds. I agree with gold investors, and I believe with Austrian economists, the way they see the economy. It's true over the long term. Obviously, a lot of this is not sustainable, but you can't live in the long term. You have to live in the present as well. And it also depends on your situation. If you're established, you're more stable, if you have a job, and you're just worried about the future, yeah, you could put money away as a nest egg, and gold could be a good investment. But if you're not stable, and let's say you don't have a job, you don't have means, and you're looking to invest, you have some money that's been put away, let's say in equities, and you see a return and you really need that money, it's there for you. And there's another thing I want to mention, that the problem with gold is there's no dividends with it. You invest in gold, there's no dividends, there's no dividend payout. And that's the problem with it. You just have to hope that it's just going to go up in value. And if you look at, what I'm talking about right now is the Dow. Most of the Dow stocks pay a pretty good dividend. So, these are income stocks, they're large cap stocks, they pay dividends. So I'm not just talking about the increase in price, I'm talking about the dividend return. So, you get the Dow, a year ago it's up over 12%. You have to also add the dividends that were paid out to you. So that increases the return. And something else I wanted to add, which bothers me about gold, is the atmosphere, the fundamentals for gold are very good. This is what disturbs me about it. I mean, you're looking at a weak economy, a lot of stimulus from the Fed. You're looking at a weak dollar, right? I mean, you would think this type of atmosphere over the past year and a half is bullish for gold. I mean, gold, fundamental-wise, should have gone up a lot more, but it hasn't. And this very recent drop, of course, they're blaming it on recent news, what's happened in Cyprus, that there was a lot of gold selling going on, and then that triggered a lot of speculative selling, short-term speculators that have sold a lot of gold. So, I believe this because this can really affect the price, especially such a steep drop over a short period of time. But you have to look at the chart. Take a look at a yearly chart, all right? And go back to the all-time high around a year and a half ago. You could see that gold was flat and hitting resistance. Then it started to slowly trend downward. That's a bear market. A very sharp move in a short period of time. And it's just, that's usually many times speculative short-term selling, and then the market comes back because it's oversold. But this is a smooth downtrend, okay? And now it's punctuated by very strong selling. This is a bear market. Now it could be a bear market that maybe is bottoming out, okay? And I think gold, like I said, I think it's a good investment, but I think you have to diversify, and I think you have to be logical. And over the shorter term, it's just not a good investment. And, so basically you have to be rational, and you have to consider other investments, equities, and even bonds, as I mentioned, which have had a return. Not dynamic like some equities and like what gold has done in the past, but they've had consistent returns. And if you're looking for stability over the short term, you have to consider these investments if you really need the money. See, that's the point. So I would like your thoughts about the economy, about the markets, about investments in gold, equities, and other types of investments, feel free to leave comments. Please like up the video. Please subscribe. And thank you for tuning in.